today's Hashi, I'm discussing existing home sales, the FOMC minutes, and weekly unemployment. Today is Thursday, May 23rd, 2024. I am Byron Lazine, and the hot sheet starts now. Welcome into the hot sheet as we close out this week. Let me know in the live chat which market you're tuning in live from today. Please consider liking the video and hitting subscribe. It's just down below. Hit subscribe and the notification bell so you don't miss any of the YouTube at Now Bam content. All right, we've got an NAR report on existing home sales. Existing home sales retreated 1.9% in April. The headlines are even a little bit more aggressive, meaning the national headlines in the media, where they'll say home sales are going down. What's going on with the housing market? All these types of things. But in reality, we're where we've been the last 2 years on existing home sales. I know it went down 1.9% in April, but we're just bouncing around the bottom, the floor, the 4 million existing home sale mark. Now, we're trending below what the projections were for this year. But remember, most of these projections were tied to lower 30-year fixed rates. I wasn't one of those leading the charge in January talking about a 5% rate, but others were. And when you tie those two things together, certainly if there was a 5% rate, we'd see more existing home sales. But we've been in a 2-year drought of existing home sales, and it's tied to the affordability issues. We want to trick ourselves and think it's tied to inventory, but inventory is just starved because of the affordability, because of the 30-year fixed. That's what's holding back these sales more than anything. But for a consumer's mindset to see, oh, home sales are dropping. No, they've dropped. They dropped 2 years ago. And this is where we're at, just kind of hovering around this 4 million mark. Right now, the seasonally adjusted annual rate of 4.14 million. That's where we're at. Well off of a normal market where we're 5 million plus. Certainly nowhere close to the 6 million that we experienced during those couple of peak years. So we've got 4.4 million on the seasonally adjusted. Month over month, that's down 1.9%. Year over year, down 1.9%. So when I say where we're at, this is basically where we've been. Now, inventory, months of inventory is 3.5 months. That is different from last year, where we were at 3 months of inventory in April. So months of inventory across the country starting to creep up. This is one of those indicators that we keep saying we don't have any inventory. We don't have enough inventory. That's holding back sales. Well, it's 3.5 months of inventory. It's starting to get closer to a normal market. Every month, this number improves. There's inventory that is sitting. There are homes in almost every single market, or maybe price pockets in every single market, where it's like, those are kind of just hanging out. They're just sitting there. They're not, that would have flown off the shelves just 2 years ago, not really moving. 2 months on the market, 2.5 months on the market. Have you seen that? Are you seeing certain price pockets? And what are those price pockets in your market where homes are just taking a little bit longer time? Median sale price right now, according to NAR, would be 407,000 plus. That's up 5.7% year over year. So sales are still really holding strong in this market. That's one of the things that hasn't improved yet for buyers. And in some markets, certainly it has. NAR chief economist says home sales changed little overall. That's my overall point as well. But the upper end of the market is experiencing sizable gain due to more supply coming onto the market. Okay, so that upper end, that might be the price pocket in your market. Total housing inventory in April was up 1.21 million units, up 9% from March, 16.3% from a year ago. Unsold inventory sits at the 3.5 months that we just shared. That's up from 3.2 months in March. So inventory starting to those jumps, those improvements are starting to speed up. Certainly from March to April, 3.2 to 3.5. Okay. By the way, that's going to be a good thing to stabilize pricing. Okay. I don't think with where rates are at, anybody wants to see. Homeowners certainly do, but for those that care about the health of the market, don't want to see 6, 7, 8, or in some markets like the Northeast, we saw 10 and 11% gains over the last 12 months on home prices. If rates are going to be hanging around the 7 for a while, and we're going to talk about the FOMC meeting minutes and the concerns that they have right right now, the indication would be that rates are going to be a little bit higher than we would want them to be for longer. And if that's going to be the case, there's got to be some movement or at least stabilization on prices. Nobody's saying prices are going to significantly go down or anything like that, but stabilization would be a good thing for a little bit right now until those rates can catch up. And here's where we've been at. When I say we've kind of just been trending in this area for the last 2 years, you can see the chart in front of you, total existing home sales. So those headlines are not that they're written to be shocking and all of that when consumers see it. Existing home sales drop, home sales are going down, real estate market, not looking up, all these different things. We've been here 2 years. Okay, it's been a real estate recession for 2 years due to the lack of transactions. You can go all the way back to uh, you know, mid 2022 when this thing started to really go down from where we peaked out at 6.6 million and 6.43 million just at the beginning of 2022. Existing home sales price, again, trending here near all-time highs right now. Depending on market, you might be a little bit off of that, but most markets across America, that is the case. Percent year over year, continuing to see those gains here. This month being the biggest one here of the last 12 at the 5.7 percent year over year gain on prices. Here's the percent change in a bar graph on total existing home sales, the total sales. Okay. So um, when you look at this, like it was a bigger drop in 2023 when you go year over year, you had 23% less existing home sales at that point. But right now, I mean, we're clocking in really flat. So those reports, and I saw a big one on CNBC, a little bit misleading when they say existing home sales dropped. They've dropped. It dropped quite a bit ago. Realtor confidence index. Right now, when realtors were surveyed, first-time home buyers' percentage of sales is 33%, according to realtors. That's up from 29% last year. Sales to investors at 16%. It's down from 17% the year before. Cash sales, 28%, even with last year. Distress sales. Here's a headline that people say, distress sales have doubled. Well, realtors say it's 2% off of 1% last year. So got to be careful when people say double or up 100% off of what? Record lows? Oh, got it. So not that big of a deal. Days on market, 26 days on market versus 22. I wouldn't be shocked if that number is already into the 30s when the survey comes out, next month. Existing home sales by region: South making up 46%, West 18, Northeast 12, and the Midwest is in at 24. Here's the sales by price range. So 45% are happening in the 250,000 to 500,000 range, and you've got 19% happening in the 100,000 to 250,000 range. Okay, so 500,000 and below is making up 64% of the sale. Actually, if you include 0 to 100,000, it's 67% because there's 3% there. So 67. So 2 out of 3 sales right now that are happening, 2 out of 3 sales are under 500,000. Yet I talk to agents on a weekly basis who are like, I'm so sick of doing $350,000 home sales. And everybody wants to raise their price point. But 2 out of 3 homes that sell, 2 out of 3 possible clients for life, consumers, people that you want to help serve in your community are shopping and selling in the less than $500,000 range across this country. I get it. The bigger deals are more fun to share on Instagram and they photograph better and it might be better for the checking account and all of that. But where the consumer needs help right now is in that 500,000. These are the sales. These aren't like the aspirations of where people are searching. These are where the sales are happening. Okay, so as much as we want to say there's not any inventory under 500,000, well, 2 out of the 3 homes that actually get to a closing table are happening under $500,000. That's where the opportunity is. It's where the opportunity is to build clients for life. And I see here's the comment. Put up Peso Real Estate at Coldwell Banker comment, and almost impossible to find that price range here. So wherever, um, New Jersey. Okay, so I get it. Almost impossible to find that price range here. You might be in a market where it's like that doesn't even exist. So totally get it, and I agree. Consumers desperately need this price range. I don't care what market you live in. You could live in a very fancy place. There are certainly residents in every single city, town, region, county in America that need this price range. And a lot of people that are in one of the luxury market agents, I would encourage you maybe to widen, unless you're like, I'm good with my business. I don't need more business. I get the right amount of referrals every year. But if you're looking to expand 20 minutes outside and try to get in some areas where you could help 2 out of 3 sales that are happening every single year. Eric Riley says land would sell for 300,000 in my area. Sounds like a very nice area, Eric. Let us know where you're tuning in from. Percent change in sales from a year ago by price range. 23.8% more. So 23.8% more in the 750,000 to $1 million range. Okay, so that was 7% of the sales. Okay, so let's just take some context with that. 750 to $1 million was only 7% of total sales in your market. Like Eric's market, he might be like, man, that's 70% of our sales, right? But when we're looking at the country, that's 7% of the total sales. That number's up 23.8%. So it was like 4 or 5%, right? If my basic math there is on the money. 17.1% of change in sales happened in the 500 750. Those are up. 250 to 500 is up 7.6, which is surprising when it makes up 45% of the sales. It's up 7.6% more. The 0 to 100 down 7% makes sense. I would even agree with you can't find anything in that price range really, no matter where you are. All right, so that's the NAR report. We'll have all of that linked up, all the slides downloadable for you inside of BAMX. Use code HOT to get 10% off of BAMX and get in today, because tomorrow and every Friday we do another BAMX in a box drop. It's where we deliver content done for you directly to you. 3 social media templates each and every single Friday, along with 2 video scripts, an email template and script, and a blog, all written and done for you. We deliver that to our BAMX members every single Friday. It's called BAMX in a box. It's part of your membership. You can use code HOT to get 10% off and join BAMX, where we also have courses every single month to support the content that we're delivering to you and all the other needs for your business, as well as the community, and as well as all of the daily downloads from the hot sheet, like the slides and the hot sheet show notes, which every single day, if you're new to the hot sheet, let us know in the comments if you're new to the hot sheet, by the way. Every single day inside of BAMX, I give you our hot sheet show notes with the sources and the slides that are relevant to those topics. You can go ahead and copy and paste this and use this in your database follow-up, email, texting, and all of that. Obviously, along with the email that we deliver to you each and every single Friday as well. But if you want more content, great way to do it is just copy and paste from here inside of the hot sheet show notes inside of BAMX. All right, FOMC, when they met on May the 1st, we know what they did. They didn't do anything. They left the Fed fund target rate of 5.25 to 5.5 at the same level. They didn't cut, they didn't raise. Okay, so it's a 23-year high, and they haven't done anything with it. So now, usually about 3 weeks later, we get those minutes from the meeting. What were they really saying? They came out, and Jerome Powell always does a great job. We covered here on the hot sheet every single press conference he has. We cover that, and he's very careful about what he says. He doesn't want to swing markets too significantly one way or another when he talks. And so he has a prepared statement. He does some question and answer, and then he gets the heck out of there. We get a look at what the minutes say when they released those about 3 weeks later. I've got this in the hot sheet show notes here. I've got all of the mentions of housing in the minutes. We go through that whole big PDF document. It's usually like 15 pages, and we deliver this for you. And I'm going to go through that here on the show. There's 4 instances when they mention housing in the minutes. But let me just give you an overall breakdown. Here's the headline from like CNBC. Federal Reserve minutes indicate worries over lack of progress on inflation. So as they met for those 2 days on April the 30th and at May 1st, they were having conversations, obviously, about what to do. It was basically baked in the cake that they weren't going to do anything. They were going to leave the rate where it was. But those conversations behind the scenes were inflation's not where we want it to be. Now, I think since this meeting, actually, the news has gotten better. But remember, on May the 1st in April, you really had 4 months of hotter than expected inflation readings and data. Last 2 or 3 weeks, we've gotten better information, so that's good. Maybe they're changing tune a little bit off of what they were at during this closed door meeting. Policymakers noted solid economic growth based on intermeeting data. April's consumer price index showed that 3.4%. Remember, April 3.4% annual rate, which was down from March, where core CPI was at 3.6. That was the lowest since April 2021. So that was one of those good readings that we had. There's optimism, though, with caution. Officials were optimistic about growth prospects, but expected some moderation this year. They anticipated inflation will return to 2% target, but were uncertain about the timeline. You're not hearing that they expect that to be this year, but then we had that crazy report out of the UK. UK went from 3.2 down to 2.1 like that. So things can happen. You take the shelter data and put it on more relevant, timely data, which they're not going to do. That would change that number. The impact of high rates is obviously going to help them achieve this goal in their mind, this restrictive measurement. Public remarks and market expectations. Fed Governor Waller emphasized the need for several months of positive data before considering cutting rates. So the Governor Waller on the on the board rather, is advocating for several months of positive data. And you would say that in the first quarter, we didn't get necessarily positive. We didn't get positive data. We had higher than expectations. So several months, does that mean you got to have 3, 4, 5, before they would even consider cutting? Seems like a much longer timeline than what most are hoping for. Chair Jerome Powell advocated for patience, suggesting the restrictive policy needs time to impact inflation. Future price indicated a 60% chance of the first rate cut would be in September. And these futures bets basically have been pretty accurate. I mean, when we're this far out, there's a lot of, time for that to change. But as you get closer, you get pretty accurate bets. So 60% chance right now that the first rate cut is in September. Stocks remained negative territory, and treasury yields mostly increased following the minutes release. So yesterday when we got the minute release, 2 o'clock, I think it was 2 o'clock yesterday, stock market stayed down, treasury yields increased. We're going to take a look at the 10-year. All right, so here's what they said about housing. That's what's most important, obviously, to us. Participants observed while inflation has eased over the past year, in recent months, there has been a lack of further progress towards that 2%. Recently, monthly data had showed significant increases. Components, both goods, services, price inflation, in particular, inflation for core services, excluding housing, moved up in the first quarter and the fourth quarter of last year. Prices of core posted first 3 months increase in several months. All right. So in addition, housing services inflation had slowed less than had been anticipated based on the smaller increases in measures of market rents over the past year. We just went through a rental report from realtor.com this week on the hot sheet, and it shows that 9 straight months of declining rents. So the data that they look at is lagging. Okay. They're not looking at these, they look at them, but they don't, it's not how they calculate inflation. The, report from last month on rent. So big thing is we want rents to keep going down. That's going to impact inflation the most. They also remain concerned that Elevated inflation continue to harm the purchasing power of households, especially those least able to meet that. We've heard this before, like food, housing, transportation. In the next paragraph, they discuss several factors in conjunction with appropriately restrictive monetary policy that could support the return of the 2% goal. One was a further reduction in housing services price inflation as lower readings for rent growth on new leases. So now here they do acknowledge what I'm talking about. Oh, well, the future looks like rent is going down because in real time it is. So they're hoping that that'll pass through their lagging way that they measure. In addition to finalize here, in addition to elevated housing costs, we're adding two financial strains for lower income households. Those are definitely the households that are getting hit the hardest right now. So there's your minutes update. We've got more data inside of the hot sheet show notes if you're interested in digging into more of that. We had a unemployment reading here as well. The U.S. Department posted its unemployment insurance weekly claims for the week ending May 18th. This just came out. And let's take a look here for the week ending May 18th. Seasonally adjusted initial claims were at 215,000. It's down 8,000 from the previous week. And really unchanged here. Here are the states with the highest insured unemployment rates. You've got Jersey, California, Rhode Island, Massachusetts, Nevada, New York, Washington, Alaska, Illinois, Minnesota, and then Puerto Rico is on the list with the states. States with largest increases in initial claims for the week ending May 11th: Florida, Pennsylvania, Minnesota, Louisiana, and Massachusetts. States with the largest decreases in initial claims: New York, Illinois, California, Indiana, and Michigan. All right, there's your report. Not much movement there. So while we know that the job market is softening, they're no longer using that word strong. We're not getting a big uptick there on unemployment. I like that. I want to see people keep the jobs. 4.473 on the 10 years where we're at right now. Yesterday on the 30-year fix, we ended the day at 7.09. It's kind of where we've been bouncing all week, is in these low sevens. We'll see what happens here today and also tomorrow as we head into the weekend. As you head into the weekend, I hope you consider joining us inside of BAMX. Some pretty cool announcements are happening in there. Use code HOT to get 10% off on that. Next week, just some updates. Monday is a holiday, so happy Memorial Day to everybody. There will be no hot sheet as the markets are closed. The hot sheet is closed. So the stock market's closed, which it is on Memorial Day. We do not run the hot sheet. So no hot sheet on Monday. We'll be back Tuesday, Wednesday, and Thursday next week. But happy Memorial Day on Wednesday, May 29th. Would that be next Wednesday already? Yeah. Wednesday, May 29th, we have a free YouTube webinar with Dan Parker and Trey Serrano. We'll put that link down below. We'll put it into the replay link, and we'll put it here in the live chat if you're interested in that. That is all. Until next time, hope you guys have a great Memorial Day weekend. Check out Knowledge Brokers Podcast tomorrow when we release a new one there over on the @Knowledge Brokers Podcast YouTube channel. And I will talk to you guys soon. Take care. And until next time, toodaloo.